Hi, I'm Dana Weeks, and I'm here with Brian Whitmer, editor of Elliott Wave International's European Financial Forecast and contributes to the monthly Global Market Perspective. Hi, Brian.
Hi, Dana.
So you believe a large reversal is coming or already in place. What are you watching for to confirm this?
Yeah, exactly, I do. And I think it'd be good just to jump right into a chart here. Here's the reversal right here. It's pretty extreme on this daily chart. So the challenge in front of us right now is basically to determine, if this sell-off is a correction of this prior advance or if this is the start of a new bear market. And there's several tools we have to do that. We can kind of ignore the Dow for a second. Let's just focus on the DAX. But there's several things we look at. In terms of wave structure, if we're able to label five waves down here, that's pretty good confirmation that the larger degree trend has turned. And we actually are able to label 5 down here. Chris Carolyn in the short-term update is labeling it exactly that way. The other obvious thing that really stands out on this chart is that we've now broken this long-term support line here. So this is support that dates back to February of 2016 to that low. We've got 5 waves up here. We've seen this before, and we've broken that lower channel line. So that's a major technical breakdown, and that tells us, if nothing else, that the trend has potentially changed here. Also, that support line now will probably act as resistance for any kind of rally. So on a longer term basis, I still think it's a bit of a waiting game. The wave structure of this last advance is kind of sloppy. We had, a pretty clear 5 waves up to that high, but, then we made a new high over here. This whole thing could be some kind of ending diagonal, which I think it may be. But I'm not convinced. I'm not entirely confident that we've seen the final highs.
Brian, let me just jump in. What about the Dow?
The interesting thing, and the other thing I want to point out, is that the long-term waves in the DAX, happen to be very similar to the Dow in the U.S., and that's why I'm showing the Dow down here. I think Steve Hochberg is labeling this as a 1-2 and then a 3-4 here with this long 5th wave that pretty much went parabolic. And we have a throw over here that came back into this trend channel. That's also good confirmation that the trend has changed. So the only point I have with showing the Dow chart is that, I think it would be really smart for European investors to kind of watch the U.S. markets closely here. We could get some early information from the U.S. as to what to expect in Europe.
Sentiment is a secondary indicator that I know is a favorite of yours. Does it support your larger view?
Yeah, it does. I mean, my larger view, my long-term view is that stocks are at or very close to an important top. So we got to ask the questions, what do we expect to see after a long advance in the market? And we expect to see optimism blooming. We expect to see surveys of consumer confidence, business sentiment, manufacturing sentiment. We expect to see all of these things, at or near extremes. And that's exactly what we're seeing. We've been showing charts of this for months and months and months. I have another one here. This is just plain old consumer confidence numbers in Germany. And I've labeled the previous extremes from 06 and 07 back here. And we just reached a 16-year high in consumer confidence. And it's always interesting to me because, a lot of analysts, they'll take these same sentiment gauges and they'll cite them as the reason why the bull market will continue. And the argument is always, well, look, the economy's doing great, everyone's optimistic, the fundamentals are fantastic. How can anyone not buy shares in this environment? But with most of these charts, if you take an honest look at the data, the fundamentals always look fantastic at market tops. That's why it's a top. Consumers are always overconfident at tops. That's why it's a top. So yeah, optimism is off the chart here. I think this is one of many examples, and I think it could be a long, long way down from here.
You're right, Brian. The fundamentals look great at the top in 07, and it seems like risk-seeking behavior is still the norm.
Yeah, exactly. I mean, investors take risks when they're feeling optimistic. That's another gauge of sentiment. They also get complacent. And a lot of times, I don't even think that most investors really realize all the time the risks that they're taking. I mean, we're seeing this unwinding now of this short volatility trade. It's a perfect example where this fundamental idea that has worked flawlessly for years and years now suddenly gets unwound in a matter of hours, really. I mean, years and years of gains just completely wiped out in hours. And so I think we're seeing this kind of risk-seeking behavior in lots of areas, particularly bonds. I can show a chart here. This is just the interest rate spread over German bonds. I'm showing Portugal, Spain, and Italy here, but other peripheral countries look similar. Investors are lending to these countries here at rates that are not that much higher than they lend to Germany. And you can look how these spreads have narrowed since the bailout era back here. Again, this is risk-seeking behavior. It's behavior that will end as optimism recedes. And the strategies that have worked over the past few years, they're just going to stop working going forward. That applies to stocks, volatility, sovereign debt, junk debt, I think even currencies and commodities. Just about every asset class is about to start behaving much differently, than it has over the past decade.
So moving forward, what's going to lead, stocks or spreads?
I think stocks are going to lead. I mean, investors typically register, their mood first in the stock market. So we're kind of seeing that now. I mean, stocks have already gotten whacked. Spreads are still fairly narrow, and I think you can definitely look toward the stock market to get an idea of where problem areas are coming in credit.
Thanks, Brian. I really appreciate your time today.
Thanks for having me, Dana.